Good morning. This is Paula White, and I am one of your instructors for Accounting 102. And this is the live lecture, the instructional hour-long lecture on week 3. So let's get started. I just want to remind you all of where we came from and where we're going. So let me go to the actual course. And you're in the live lecture right now. And the schedule for this mod, it always says subject to change, so always check on it. Right now it's 11 a.m. and this is my slot, and I'm doing the instructional lectures for this mod. However, if my students in my class cannot come to this hour-long session, they can also have time with other instructors who are also teaching Accounting 102. So those folks are scheduled on Tuesday at 8, Wednesday at 11, and 6, and Saturday at 11. So if my students who cannot go to my session at 11 o'clock on Monday, if they can go at Wednesday at 11 and again on Saturday at 11, they can do that. Guess what? The reverse is true. Students in these other sessions can pop into the Monday instructional and get the live instructional lecture given to them as they are participants in the instructional lecture that's recorded and shared with everyone. It's important to note also that these other sessions outside of the first one in the week are not recorded. Those are more private one-on-ones, but they're not private. But if you're the only one on, it is private. If you have 2 or 3 people in the room at the same time, guess what? Your questions will be pretty much the same as their questions. So you're all getting individualized, faculty-led tutorials. So let's go back home. You also have your Student Success Center inside of Shark. There's several ways of getting there, but I'm just going to go here. And my goodness, the very first box is accounting. You click on it. This is a schedule of the person who is actually focusing on accounting. And this is the schedule for accounting for this mod. Very easy to pop into and engage with your tutor. Plus in your announcements, you should also have some schedules and encouragements to go to the tutoring center through the announcement section. What other cool things does the college have for us? So you have tutoring, you have the instructors, you have the instructor's time spent just for you. There's also, because this is called a mega course structure, don't get excited about the title. It's not more work. It's just easier to get support. So let's go home and let's go into the modules. And at the very top of the modules, this is the list where you go to, here's week 1, week 2, week 3. If you go to any of those weeks and go up, or just go to the modules and you're there, there's a section here called Mega Course Lecture Videos. Click onto there. And there are little tiny short lecturettes. So for week 3, for an example, we're not going to listen to it because it will be. This week we're going to learn how to account. So it's a 9-minute video on the purchasing process and the subject of today. So a 9-minute video which is a lot different than the format of an hour-long video. But if you just want to keep getting it, listen to it over and over again, a 9-minute video is easier to do than listening to an hour-long lecture over and over and over again. So you have, and then don't forget your textbook. Textbooks are great sources of information on how to do things. So you have a lot of support here at your college. So why don't we get started? Just as a backdrop, last week was on accounts receivable. Basically, instead of posting all the transactions directly to the general journal, like we did in Accounting 101, we are trying to gather up similar transactions and posting a summary transaction to the general ledger. Therefore, when it gets posted to the general ledger, we, instead of putting all the detailed journal entries into the general journal, then when we post them to the general ledger, we don't have all the detail in the ledger, but we have the impact of all those detailed transactions. So, and also to save some work, because if you have 100 sales transactions, that's 300 different entries into 300 entries into 3 accounts. That's a lot of work. I would rather do 3 entries into 3 different accounts: sales, accounts receivable, and sales taxes payable. I would rather make 1 entry into those 3 accounts instead of 300 entries into those 3 accounts, and that entry be a summary entry instead of a detailed entry. But we still need details. So last week we did the sales journal, and the details are in the sales journal. And then we posted the actual summary of the totals of the sales journal. We posted those directly to those accounts in the general ledger. Here's accounts receivable, here's sales taxes payable, and then here's sales. So instead of having this be 4 entries, it's 1 entry, it's the total. But there's some details that were left out because Abel would like to know how much they owe the company. So you have to then put the accounts receivable detail information into the specialized ledger for accounts receivable. And here's your accounts receivable ledger. It's not by account, but it's by customer, because that's the important part of the accounts receivable. It's how much does your customer owe the company. So it's by customer here, and this is the detail from the sales journal. 3,500, 2,000, 1,000, and 2,400. I bet you we will find those right here: 2,400, 3,500, 1,000, and 2,000. So that's where we were coming from last week. This week is the flip side. So last week we had, this is about people buying merchandise from us and owing us money for that, accounts receivable. What happens on their books? They're buying merchandise from you, so on their books they have a purchase. On their books they have an account payable because they have to pay us, and we have an accounts receivable because we get to receive their payment. It's just the flip side of the same transaction. So when a company purchases, they have a purchase, they have an accounts payable, and sometimes you get discounts on purchasing on a timely basis. That's the subject for the day, is the flip side of selling, which is purchasing. So the rest of today, will be the PowerPoint for the chapter. And then we are going to go through an example of the homework and what's expected. Now, these numbers in the example are different than your homework, so it's not your solution, but it's the same template, and we can walk through step by step the homework template. Okay? So far, I have no one on with me. Several people wanted to be on today, but I don't know why. And let me just make sure that when they come on, I will know by setting a bell. Play, enter, yes, we're good. So when someone shows up, I will know it with a bell and you will know it too. So it's always best to have someone on to talk to. PowerPoint. Yes, this week is chapter 8. You've come a long way, baby, right? We started with chapter 1 just a mere, 7 weeks ago. And now you're already on chapter 8 in accounting. You have accomplished a lot, so give yourself credit. Today we'll be on merchandise purchases. And this section of the chapter's objectives is to record purchases of merchandise that you buy on credit in a 3-column purchases journal. And then you post from that purchases journal to the general ledger accounts. So let's talk about the procedures that a firm usually goes through when they purchase. First, the sales department sends an authorized purchase requisition to the purchasing department. This is simply, hey, my department needs some product. We need pencils and paper and this specialized type of a notebook for our own business purposes. So it's an authorized purchase requisition. It goes to the purchase department, and the purchase department is the department that's responsible to placing the orders. So they issue the authorized purchase order and sends it to the selected supplier. Many times in businesses have business relationships with other vendors, and there's discounts that they can get because they are a good customer. They have a lot of quantity that gets passed between the two companies. They get a lot of quantity discounts. So this is a way of managing the vendor relationships, is to have a purchasing department. Then a receiving report is prepared when the merchandise is received. This tells the receivers of the report that we received 2 cases of paper, 5 boxes of pencils, whatever we received from Office Max. The merchandise has been received, and this is the quantity that has been received. Then the accounting department gets it, and they receive the invoice from the vendor and copies of the purchase order and copies of the receiving report. And the reason that they have the invoice is what the vendor says we owe them, because the vendor says that they sent so many units of X, Y, and Z product to us. The purchasing order is the internal, this is what we approved to buy from you. And the receiving report is what we actually received from you. So if there's any discrepancies between these, it has to be worked out right at this point. Because we're not going to pay an invoice with 3 more quantities of product A than what we received or than what we ordered. So let's talk about the cost of goods account. Cost of goods sold, we have the price of goods. So that's, in this example, $550. That's how much we purchased. To get them to our location, we had to pay a freight charge. And the freight charge in this case was $50. So the invoice that we receive and that we need to pay on is $600. So how does that translate into accounts and debits and credits? Well, the easiest one to think about is accounts payable. Payable is a liability, and we know from Accounting 101 that liabilities have credit balances. So we're going to credit $600 to accounts payable. Now we know that we have $550 and $50 that adds up to the $600. So we have a purchase account called purchases, and that's going to be a $550 debit, and freight in is a $50 debit. These two accounts we will learn in the future are temporary in nature because at the end of the month, yeah, we have $600 in purchases. Well, if we purchase them as inventory to be resold, then at the end of the month, all of this has to go to one of two places. Cost of goods sold in our income statement as an expense, reducing revenue, or in our inventory account as an asset waiting yet to be sold in a future period. So purchases will not stay in the purchases account past the current month, and neither will freight in. But purchases is the cost of the items we ordered and received, and freight in is the cost of getting the product into our loading dock, our shipping, our receiving dock, so we can have access, we have possession. Getting it from the place that was shipped from to the place that we accept possession. Many times we have to pay that freight, and that will be part of the cost of our inventory or cost of our purchases. And yes, cost of goods sold accounts have normal debit balances. Now, if we had 4 transactions, because we had 4 different purchases throughout the first week of January, January 3rd, 5th, 6th, and 7th, we would have to make, if we were still in Accounting 101, we would have to make 4 separate journal entries. Debit to purchases, debit to freight in, credit to accounts payable. 2 days later, debit to purchases, debit to freight in, credit to accounts payable. Different purchase, different amounts, but the same thing. So purchases on the 6th, a day later, debit to freight in, and credit to accounts payable. And guess what? On the 7th, we're doing the same thing. Debit to purchases, freight in, and credit to accounts payable. I like this little comment here because it says, these 4 journal entries require 12 separate postings to the general ledger accounts. It takes a great deal of time and effort to post them. And if you're like me, when I post them manually, I can make a human error. So let's even reduce the ability of us to make human errors. So what do? we're going to be doing something similar this week that we did last week. Last week, this was the sales journal, and this was the general ledger accounts relating to sales and accounts receivable. This week, let me get. Okay. This week, this is the purchases journal, and it talks about the name is who we purchased from, the invoice number, the date of the invoice, the terms, accounts payable, and this is the actual journal entry. We're going to debit purchases, we're going to debit freight in, and on the general ledger, we're going to credit accounts payable. And for each of these transactions, we're going to record who we purchased it from, the invoice number, credit terms, and that we purchased $2,675 in purchases in merchandise. It costs us $190 in freight in, and the accounts payable is $2,865. So we just keep a running list of these transactions through the month, and then at the end of the month, we total them up. So at the end of the month, we actually then post directly from this purchases journal directly into the general ledger. We're not posting the individual detail into the general ledger. That would be more work. What we're doing, we are going to go to the accounts payable account, and our total is $18,795. It says accounts payable credit. We're going to go to the accounts payable account and go to the credit column and put in the total. $18,795, $18,795. The account number of the accounts payable account is 205. Then at the bottom of the column here, we put in the account number. This is the posting reference, 205. And likewise, the purchases journal is page 1. So we're going to, in the accounts payable general ledger account, we're under posting reference, we're going to put a P1 for purchases journal, page 1, to show the source of this $18,000 number. So that's the cycle there. And then we continue to the purchases account. We're going to debit. So here's the purchases account in the general ledger. We're going to debit $17,540. $17,540. It's also from the purchases journal, page 1. And these are all dated January 31st at the end of the month. And it's a debit balance. So it's a debit transaction, and there was no beginning balance here. So the ending balance to this account after this transaction is $17,540. Up here in accounts payable, we had a beginning balance of $10,800. We added $18,795 to it as a credit. So now our ending balance in accounts payable is $29,595. And we do the same thing with freight in. We go to the freight in account, and $1,255 we're going to debit. So we're going to go to the debit column and put $1,255. P1 as the posting reference, account 502 as the posting reference in the purchases journal. And we're pretty much done with this part. We don't have this detail though in the accounts payable ledger. So okay, so we'll just follow this. First, we're going to enter the date, supplier's name, invoice number, invoice date, and credit terms. In the purchases journal, we just talked about that. And in the accounts payable credit column, enter the total owed to the supplier. So this is the total that we owe to each supplier. In the purchases debit column, enter the price of the goods purchased. And in the freight in debit column, enter the freight amount. Okay, examples of credit terms. Usually, it's net 30. So that means that when you're able to purchase merchandise from a vendor and you say, just invoice me, they expect their money within 30 days. The net amount, net of any discount, and they're not giving you any discount, so the entire amount is due in 30 days. So net 30, or we also show it as in diagonal 30. So in 30 is called net 30, and that means the bill is due in 30 days and due in full. Net 10 in the month. In 10 EOM. So net 10 days EOM. So payment in full is due in 10 days after the end of the month in which the invoice was issued. I haven't seen this too often in practice, because what happens if you purchase something on the 2nd of the month? That means, okay, the 2nd of, let's say, August. So you purchased it August 2nd, and it's not due, payment's not due to the vendor until 10 days after the end of the month, which is August 31st. So it's not due until September 10th. That's a long time not to have payment coming into the company if you're the vendor selling the product. But regardless, that is what it's about. Payment is due in full 10 days after the end of the month in which the invoice was issued. A very common one is 210 net 30. It looks like this. It looks like 2 divided by 10, comma, n divided by 30. That's spoken as 210 net 30. So it means 2% discount can be taken if you pay us within 10 days of the invoice date. Else, the entire amount is due to us in 30. So if you have a $1,000 invoice, you can pay $980 in 10 days and have it paid in full. Or the 11th day to the 30th day, you can pay the entire $1,000 amount. So these discounts become important to businesses because, number one, from the grantor, they get their money faster. And money greases the wheels of business. The smoother and faster you can get your money in from sales, the better you're able to pay your employees, pay your vendors, pay the stockholders, pay the banks on your mortgages, on your credit card bills. You need money to run a business. So from the issuer issuing a 2% discount to their customer, they get their money faster, so that's a value to them. For the people paying earlier, they don't have to pay as high of a price. Instead of paying $1,000, they can get the same merchandise and pay $980 for it. That's pretty cool on both sides. And it works well if the purchaser has the cash to be able to pay within 10 days. And you've already seen these in this presentation, and I'll show you where, right here. Under the Purchases Journal, the invoice date, followed by the terms. 210 net 30, net 30, net 30, 210 net 30. So you'll be wanting to make sure that you pay. If you're going to do partial payments, you want to pay Active Designs, World of Sports, and Athletic Equipment within 10 days of this invoice date. And then we can wait to pay these until we can cut the check like on the 30th day or the 29th day and put it in the mail. So it's paid by the 30th. So post from the 3-column Purchases Journal to the General Ledger accounts. When I was grading the homework this week from the accounts receivable exercise, some students took the sales journal, made it into a summarized journal entry, and put that journal entry into the general journal, and then posted that journal entry directly to the general ledger. Well, you don't have to do that extra step. This is a purchases journal. You don't have to translate the totals there to a general journal entry and then post it from the general journal to the general ledger. You can go directly from the purchases journal or last week from the sales journal directly to posting it to the general ledger accounts. So purchases journal simplifies the posting. And your proof of your purchases journal, purchases debit column is $17,540. Your total freight in debit column has a $1,255 total. Add those two together is $18,795. And your accounts payable credit column is $18,795. So debits equal credits. So summary amounts are posted at the end of the month to the general ledger accounts. So we'll go through the 7 steps to post from the purchases journal to the general ledger. Number 1, locate the accounts payable ledger account. Enter the date. Enter the posting reference. Enter the amount from the accounts payable credit column in the purchases journal in the credit column of the accounts payable general ledger account. Then compute the new balance in that general ledger account and enter it into the balance credit column. And in the purchases journal, you enter the accounts payable ledger account number and put that under the column total. And repeat the steps for purchases debit and freight in debit columns. So what are the advantages of a purchases journal? They allow for the division of accounting work among different employees. It strengthens the audit trail. It records all credit purchases in one place. So, okay, section 2 of this chapter. So let's post credit purchases from the purchases journal to the accounts payable subsidiary ledger and record the purchases, returns, and allowances in the general journal and post them to the accounts payable subsidiary ledger, and then prepare the schedule of accounts payable. So you have accounting for purchases. Okay. And the last one is compute the net delivered cost of purchases. Demonstrate the knowledge of procedures for effective internal control of purchases. So step one is to, here we have a purchases journal, and this is International Sportsman. We've already posted the summary data to our general ledger. So our general ledger is cool. It's got the transaction impact in it. So when we do financial statements, the impact of these transactions are in the general ledger, because here we know that we posted them, because here's your posting reference. Now we need to work on the accounts payable ledger. Accounts payable ledger is a subsidiary ledger, a special ledger that is only about the accounts under accounts payable, which would be Active Design, the Sports Warehouse, International Sportsman. These are the accounts inside of accounts payable. This is the same thing that happens when you call on your credit card company and you're given the opportunity to put in your account number, your credit card number, and then you're given to a live agent, right? But that agent only has access to the accounts payable ledger of that credit card company. They only see this level of detail as if you were International Sportsman. So that's the people you're talking to, are the accounts payable people. But it's your accounts payable, it's their accounts receivable. So when you call your credit card company, you're talking to the accounts receivable department of the credit card company, which will have this level of detail. And your level of detail and their level of detail should be the same. Okay, so International Sportsman. First thing is you bring down the date, you bring down the invoice number. Posting reference is Purchases Journal, page 1. And then you're going to put the $600 total accounts payable credit into the accounts payable ledger for International Sportsman. And since they owed us, since we owed them $1,600 and we just added $600 more to the amount that we owe them in accounts payable, we owe them $2,200. So if we would call them up, we would need to ask for their accounts receivable department, and because their accounts receivable department detail for us should be the same as our account payable department detail with their name on it. So this is how much we owe them, and this should be the exact same amount that they have on their ledgers in accounts receivable as to how much we owe them, therefore their account receivable. Objective number 4, record purchases, returns, and allowances in the general journal and post them to the accounts payable subsidiary ledger. Okay, so a purchase return is you just return the product, it's unsatisfactory. You have previously purchased this for resale. So that's what a purchase return is. Sorry, didn't like the color. Okay, so posting from the general journal. You don't put purchase returns in the, we don't do them that often, so they don't warrant development of a purchase returns journal. We just put the purchase returns directly into the general journal, just like we did all of our transactions in Accounting 101. So here we enter the amount of the return or allowance in the debit column. Oh, come on. Okay, so here we have accounts payable, international sportsman. We returned $100. So we're going to debit that account because remember accounts payable has a credit balance. We're debiting it to reduce the balance because we returned the merchandise. And then the account is purchases, returns, and allowances, credit. And the reason is that we received a credit memo 103 for damaged merchandise return, original invoice 7985, dated on January 23rd. So you really need to keep this level of detail in with this transaction because it's always helpful. So now we're saying enter the amount of the return in the debit column of the creditor's account, which is right here. And we're going to put it, well, that's kind of cool because right here we should have a debit going into the international sportsman. So this amount should have been reduced to $2,100 if we could just see the rest of this transaction. So now we have max out sporting goods schedule of accounts payable. And basically for each and every company that we owe money to in our accounts payable, we list those accounts and the total in those accounts that we owe. So the $20,245 is how much we owe and how much we owe each of our vendors. Now in the accounts payable account, which has more summary level of detail in it, it should be the exact same amount. Here's our balance. Here's our $100 return. Here's our $18,795 that we put in as a credit to increase because of this month's purchases. And we haven't gotten there yet, but this is from our cash payment journal, and we paid $9,250. So this beginning balance plus these debits and credits will get us $20,245. But each of these summary or detail have been entered into the detailed accounts payable ledgers and are reflected in these numbers. So the total of these numbers should equal exactly what's in our accounts payable general ledger, and this is the amount that goes into the financial reports because the general ledger flows into the worksheet. The worksheet is what we use to develop our financial statements. So now the net delivered cost of purchases for max out sporting goods for January is calculated as follows. We have purchases of $17,540, freight in of $1,255. So our delivered cost of purchases is $18,795 minus our purchase returns and allowances. 100 gets us our net delivered costs of purchases. I think that's pretty much straightforward. How much you purchased, what was the cost of getting it to you, is your delivered cost of purchases, minus how much you returned, gets you your net delivered cost of purchases. So effective systems have the following controls in place. In this entire course, we've been having discussion forums on controls. So in this particular situation, all purchases should be made only after proper authorization has been given in writing. Goods should be carefully checked when received. They should be compared with the purchase order and with the invoice received from the supplier. The purchase order, receiving report, and invoice should be checked to confirm that the information reflected on the documents are in agreement. The computations on the invoice should be checked for accuracy. Believe me, I've seen some invoices that the multiplication was incorrect on. So you do have to check those invoices. And number 5, authorization for payment should be made by someone other than the person who ordered the goods, and this authorization should be given only after all verifications have been made. And a separate person should write the check for payment. Pre-numbered forms should be used for purchase requisitions, purchase orders, and checks, and periodically the numbers of the documents issued should be verified to make sure that all the forms can be accounted for. And that's the end of the actual presentation of the material. However, I'm going to go to the actual course home and show you the homework with different numbers in it, of course, but show you the homework nevertheless and what we're expecting, because it's always easier to do when you know what the teachers are expecting you to prepare for. So week 3 assignment. Again, it's worth 120 points. And we have a new computer sales promotion. And we hope that it brings in more cash customers to your store for February. But here's our subsidiary ledger. Recognizing the importance of properly tracked receivables, you also recognize the need to create the other side, which is an accounts payable subsidiary ledgers. And we have these vendors that we have established credit with, Elite, Simon, and then we do have existing balances in the templates for those 2 companies. And we have these transactions for January. We're purchasing merchandise for resale, purchasing some more merchandise for resale. And guess what? We're purchasing more merchandise for resale, and we're purchasing supplies for the shipping department, and then we're returning some amounts for $400 merchandise purchased. So right now you should be thinking, where am I going to be posting these? Which journal? Probably the purchases journal, purchases journal, purchases journal. And the last one will probably be the general journal. But I'll let you be the decider on that. And then you drop down this template to complete the work. And let's see what the template looks like. And here's your purchases journal. Everything in yellow, we expect something in there. And then here's your general ledger, the general journal. There's 2 transactions that we need to put in here. And then here's a general ledger going down. It's not the complete general ledger because it's only has the accounts relating to this particular problem. And then just like last week where we had the accounts receivable ledger, this is the accounts payable ledger. And the accounts in here is Elite Computing and Simon Supplies. And then here's the schedule of accounts payable. And the question is, does this total match the current balances in the general ledger? Yes or no? Well, if your answer is really no, then you've made a mistake somewhere. So start rechecking your your answers. So I understand that that doesn't quite get you too much confidence and ability to do the work. So what I've done, I've taken that same template, I've changed the numbers. So this is not your solutions. And I'm going to undo this for the moment. Oh, okay. Sorry. So we have 3 transactions of those 5 that we need to actually put into the purchases journal because it's for purchasing merchandise for resale. So we had 3 of those transactions. Here's the invoice date, the terms, and different sets of numbers. But here's our accounts payable credit, purchases debit, freight in debit. Now the blue items are the totals of the column. So we have 9775, 9500, and 275. So do these add? Do these debit has to equal credits? So if I take my credits and subtract them from my debit, do I get 0? Yes, I do. So this is a balanced journal entry. If I post purchases debit 9500, freight in debit 275, and accounts payable credit 9775, it's a balanced journal entry and it will work in our ledger, general ledger. So let's see. Let's go to the ledger tab, and in the blue, here is purchases debit 9500, freight in debit 275, and credit 9775 to accounts payable. So that's how that relationship works. Then the account that I put this credit to when I posted the 9775 is account 201. I go to journals, and when I post that 9775 to that account, then I put the account number. And my purchases, and you do the same thing for purchases and freight in. So purchases would be 501 and freight in would be 502. So that's what I would expect to see here and here. Then let's continue with the general ledger at the moment. So here's a general journal. Here's one account. Here's one general ledger account, general journal entry. And here's another general journal entry. Different amounts. So this isn't the solutions for you, but here's a debit and a credit. I put those in purple for 550 and for 200. And let's see here. Do we see anything that I put in purple here to prepare for you all? So we're going to debit accounts payable, 200 for return. And that's account 201. And then we're going to credit purchase returns and allowances, 200. And that's 503. So I would expect those account numbers to be put here for this one. And I would expect J5 for the posting reference to be put next to the entries in purple. You do not put purple entries into your homework. Don't go to that extreme. But here's J5 and here's J5. I did it for visual effect for this presentation. So we've then taken care of the general ledger. Now I think this is a light green I used. So purchases a journal impacts accounts payable, and accounts payable, we know we have people that we have to pay, therefore we have an accounts payable ledger. So these amounts need to also be posted to the accounts payable ledger for Elite, Simon, and Elite. So 4,000, 1,575, and 4,200. Let's remember those numbers. Let's go over to the accounts payable ledger. Here's 4,000, 1,575, and 4,200. Elite has a credit because accounts payable is a credit, right? So they owe us, or we owe them an additional $8,200 on top of our $5,500 balance. So right now we owe them $13,007. But these postings right here come directly from the purchases journal. This is because we took care of the purchases journal correctly. When we did the postings, then all the information here was what we needed to complete this work here. Have invoice number, invoice date. The source of the information here came from the purchases journal, page 1. And that's where the $4,000 came from. And the purchase and the posting reference back would be a check mark, or it's easy for as an accounting student with computers, put an X there. You know, yes, we put this particular $4,000 amount into the Elite Computing accounts payable ledger. And we did the same thing with 1,575 and 4,200. 1,575 and 4,200. So then, with the total of the accounts payable ledger of 13,700 for Elite and Simon Supplies of 3,225, we do a schedule of accounts payable, which has 13,700 and 3,225. For Elite and Simon, we come up to a total. And does this amount equal our accounts payable ledger account in the general ledger? And I would say it does. Here in the top row, it's 16,925, 16,925 schedule of accounts payable. And I bet you if I go up a couple lines, we're going to see that this is the account payable account. Accounts payable account. So we're able to verify this balance because accounts payable has to be amounts that we owe other companies. So we have a list of all those companies that we owe and how much we owe to them. That list and that total should be what we owe them, which should also be on the general ledger. I hope this has helped today. If not, let your instructor know, and if I'm your instructor, let me know, and because we're all here to help you succeed. Okay, so congratulations on getting to week 3 of Accounting 102, and we have one more week. And let us know if you have questions. Reach out to your instructor. Reach out to other instructors who do these live sessions. Reach out to the tutors. They are awesome. Reach out to your textbook. Open it up and watch those mega lectures and watch this lecture. There is a lot of information for you at your fingertips, and I think this is awesome. Also, in addition to that, I implore you not to wait until next Saturday to try to do all of your Accounting 102 homework. That will not work because you need to take accounting a week at a time and have it become part of you a week at a time. You cannot do this entire course in a mega weekend marathon. So please don't put yourself through that. And I will say I'll see you next week, and goodbye.